Welcome back to Joe's More Report Chart Analysis videos on Tuesday 26th of July with me, Richard Perry, market analyst at Asset Markets. Let's look at sterling dollar, and we are getting traction a little bit to the downside. It really is testing this this support at 30.60, which is this red line here on the daily chart. As you can see, 30.60 was sort of last week's low, and it is being tested again. Tested on Friday, held on a little bit of a minor bounce yesterday, and that Friday test came on the back of those PMIs that were so disappointing. Monday's bounce didn't really do a great deal to find support because we're back lower again by another 50 odd ticks. So we are sort of back towards that testing of support. If you break that, to be honest, I think you're back at the lows. You've unwound the momentum indicators back to 40 again. RSI sort of, if the RSI is struggling at 40, that certainly does not bode well. MACD lines struggling, stochastics beginning to really push lower again. So I think it all points towards a break of 30.60 and subsequently a retested 28 figure area, which was that sort of 31-year low. Ultimately, I think we are going to test that low and probably beyond that, and that's going to come with monetary easing from the Bank of England. But in the meantime, I think certainly the market is beginning to price that in after that weak PMI data that we saw last Friday, and subsequently we're going to see the selling pressure in the sort of coming days in front of the Bank of England, which is actually next Thursday. Here we see the hourly chart on sterling, and it is, as I said, technically negative. Configuration on the hourly momentum indicators all negative. MACD lines rolling over, RSI rolling over at 55, trading underneath falling moving averages. You've basically got the whole package of bearishness. 31.60 is a near-term pivot. Formed the low last week, then on the breakdown is formed a resistance again. So that is your initial sort of resistance, and we've sort of already tested that 30.60 level by a couple of pips this morning, and it bounced off it, but I think that ultimately we're going to retest that level. And then beyond that, you've got 30 figure, which is the psychological level. I mean, it's a loosely psychological level, but still I think it's a level to talk about. But then beyond that, you're at around the sort of 28 figure regions. But rallies are a chance to sell clearly. So 31.60 is your key sort of pivot level. If you break above that near term, that's improving the situation, but still with 32.90, and to be honest, 33.10 also still intact. Whilst they're intact, I think you're still negatively configured as well. But I think use this minor rally that we've got in sterling in the last sort of hour or so as a chance to sell, because I think it's going to be sort of falling back to retest that 30.60 level. So I wish you good luck in your trading today, and I'll speak to you later.